Hello traders, welcome back to the channel and welcome back to another weekly market preparation video. A lot of stuff has been happening in the financial markets recently. We have the US and Iran MOU, the fragility, the ambiguity around it. We have the Federal Reserve turning hawkish. We have higher interest rate scenario and a lot of other things. And in this video, we will be covering all of that. We will be going through gold, we will be going through SPX, oil, and other related assets as well. We will go through the technicals, fundamentals, and sentiment, and based on that, we will form our trade plans for the upcoming week. So, without any further ado, let's just start. First of all, we have two important announcements to make. The number one is going to be related to our free signals, and the second is going to be related to transparency. The first thing is that we are launching free observation trades starting from tomorrow. All of our private community trades, their risk management, their analysis, their trade management, their entry point, exit point, each and everything will be shared directly inside our public Telegram community, and I will share its link in the description. Now, an important point to note here is that these are going to be free observation trades and you should not take them as free signals, right? They are meant for your observation to help you see that how we actually practically make money, manage our trades, risk, discipline, the reasoning behind them, so you can learn and observe some practical money making. The second thing is going to be transparency. Now, there are a lot of people on the social media, on Twitter, on Telegram, these a lot of forums, right, who sell a lot of services, whether it's signals, whether it's investment or financial advice, or whether it's a course, but they don't provide any performance stats, they don't provide any verified track record. However, when you will come on our website, I will drop its link in the description as well. You can see all of our P&L statements, an overview of our performance, our equity curve, and our P&L statements directly on our website. All of this data is verified, is tracked, and it is only meant for transparency. So you can know the person whom you are following is actually profitable or not, right? So this was pretty much it about the free signals and about transparency. I will drop the relevant links in the description. Now coming back to the market preparation. First of all, if we see technically gold remains in a short to medium term bearish trend. Now, obviously, most of it is driven by the inflation expectations, higher interest rates expectations, the supply shock in the SOH, the US and Iran war, each and everything, and recently as well, the Federal Reserve turning hawkish as well. Due to all of that, gold has remained under pressure, and another key reason here is that obviously going to be the hike in the real yields, the upside movement in the real yields. Now if we see, the real yields have been continuously rising, especially the 10-year real yields. They have been continuously rising this month and they are putting pressure on gold. Now what this actually means, in simple words, if the real yields are rising, it simply means that the opportunity cost to hold gold is also increasing. That's why at such times investors simply ditch gold and they move towards interest yielding assets. Maybe it can be bonds or it can be the dollar itself as well, right? The point is that when the real yields are rising, investors usually ditch gold, right? That is why we are seeing some continued pressure on gold prices. And the one more thing here is that if we see our MRKT dashboard and if we just look out for gold here, right, we can see on MRKT, if we see, just let it load a little bit, and obviously we are preparing the fundamental analysis, we can let it prepare, and on the other hand we can see the live news until then. Now, if we see the breaking news today, we are seeing some sort of optimism between the US and Iran MOU. Qatar and Pakistan are to participate in Washington Tehran summit, and obviously it is related to the US and Iran current negotiations which are happening after the MOU, or the Memorandum of Understanding, signing. US and Iran negotiators hold trilateral talks with Qatari mediators as well. Israeli president tells Folk News he would welcome peace with Lebanon. So right now, over this weekend, what we are seeing is some sort of optimism. Now, that is another story. If this optimism will hold or not, if the ceasefire is fragile or something like that, right? That is another story. what you have to understand right now, that currently we are seeing optimism, right? We are expecting, due to this optimism, that the oil supply shock will reduce, inflation fears will reduce, and interest rate expectations will reduce as well. Now, I'm just giving you an overview. This is not my final verdict, right? So don't conclude anything from it. I am just building a story right now, right? So just stay with me, just stick with me, right? And after that, if we see gold right now on our MRKT dashboard again, if we go over to gold, and if we see, the day trading bias on gold is still bearish. Now, the majority of the reasoning right now is not going to be the US and Iran MOU or the optimism related to it or the fragility. Sorry, it is not bearish, or the day trading bias is not bearish on gold due to the tensions or the fragility or the skepticism around the deal, around the MOU. The majority of the reason is going to be the Federal Reserve, as the Fed is opting for a higher for longer stance with a potential 2026 hike as well. The Fed is project stronger and more persistent inflation above target. The Fed is expected to hike the interest rates, right? Due to this, we are seeing a bearish bias in gold. It's not related to the fragility, related to the skeptic. I don't remember the word, or related to the ambiguity around the US and Iran ceasefire, right? It is mainly related to the central bank, related to the Federal Reserve. Now, if we form a picture around gold, if we see that what are the current factors, obviously, then we will come to the conclusion after drawing the current factors, right? Now, the point with gold here is that, or the point with the current macro picture right now is that we have a US and Iran ceasefire, but mostly it is noise. Obviously, you will see positive headlines related to the Strait of Hormuz, related to the talks, or you will see negative headlines as well related to the Strait of Hormuz and related to the talks. But the point is that all of this, all of these small strikes, all of this small optimism, all of this MOU has been already mostly priced in already, right? The markets are not focusing on this. The markets are focusing on, either they are waiting to see if there will be a total collapse of the current ceasefire or a permanent end to the war, right? They're not focusing on these small positive headlines or small negative headlines anymore, because most of it has been priced in already. Now, the main focus or the main market mover will be a total collapse of the ceasefire or a permanent end to the war. Until then, everything else is going to act as a noise related to the current US, Iran, or even the Israel situation with Lebanon, right? Everything else will be noise. The main focus right now of the markets is the recent Federal Reserve meeting. This is the main focus, and the Federal Reserve was, obviously, as of now, obviously their stance can be changed in the future, but right now at least they were hawkish and they pointed towards a possible 25 basis point hike as well going into the end of 2026, which is going to put some selling pressure on gold, right? So the conclusion is that everything related to the US and Iran situation, whether positive or whether negative, everything related to all of the situation is going to act as a noise until you have a total ceasefire collapse or a permanent end to the war. Now, based on what I just told you, and based on the fact that MRKT short-term bias on gold is bearish, we are looking for selling pressure on gold, and the fundamental reasoning, the higher interest rate for longer scenario, the real yields rising, dollar rising, all of this puts me in a bearish camp for gold in the short term at least. And if we see, we have two main areas right now. One is around the 4180s for continuation of gold sells, and the second one is around 4250s for continuation of gold sells again. Now, if we move on to our charts, and if we move on to the higher time frame first to see the overall technical picture, right? First we have to see our demand area, which is our target right now, right? So this was a profit taking move which happened, and around, you can say, in late 2025, after which obviously gold formed a base and then continued to rally towards the initial half of 2026, right, or the initial first quarter of 2026, right? So here gold formed a base around the psychological $3,900 area, and this is a very significant demand area as well. For now, from a technical perspective, Gold has broken below the 200-day moving average. It has retested that as well and again rejected, which confirms that the sellers are in full control right now. And obviously, the recent Federal Reserve meeting, the fact that the Fed was hawkish, and the fact that the real yields are rising, all of these technical facts, these macro facts, they put me in a bearish camp for dollar for the gold. And right now, based on all of these facts, technically as well, I am targeting this I am targeting this major demand area, major base of gold around the $3,900 per barrel per ounce, where we may form a short-term base, where we may see kind of a short-term bullish reaction or a bullish pullback, aggressive bullish pullback as well, right? But for now, our target is this. Now, if we move on to a bit of a smaller time frame, if we move on to a bit of a smaller time frame, the fact is that the point is that right now, as I just showed you on the MRKT live news terminal, as I just showed you that right now we are seeing some sort of optimism, right, between or related to the US and Iran talks, right? We are seeing some sort of optimism related to the Israel president announcement that he is welcoming peace with Lebanon, related to the meeting between US and Iran negotiators, and all of that stuff. We are seeing right now some sort of optimism in the financial markets, right? And due to that optimism, I expect in the initial half of the week gold prices to resume higher. Now, I'm not bullish on gold. I'm not going to catch this move higher. I am just simply going to wait for better prices to look for continuation of sellers targeting first the 40-50s demand area and then the 3940s by 50s demand area on gold. Overall, I'm in a bearish camp for gold, as I earlier told you that anything positive or negative related to all of this US and Iran situation is going to act as nothing but simply noise. The main focus right now of the markets is the hawkishness of the Fed, the real yields, which are obviously putting pressure on gold prices. But at the same time, as traders, we have to remain adaptive to any type of noise as well, right? We have to remain adaptive to it. And that is why we can see in the initial half of the week some sort of a pullback towards 4250s, 4230s supply area, from where we may possibly see any type of continuation of gold sellers toward 4050s, 3950s, something like that. And as I earlier told you, all of the trades which I will be taking in the next week and especially in the next 5 months, all of them will be shared directly inside our public Telegram community, and you can find its link in the description. We are sharing all of our trades free, totally publicly inside our public Telegram community, and I will drop its link in the description as well. So this was a pretty simple bias for gold, right? This was a pretty simple thing for gold. Now, one more important thing which you have to understand is the economic calendar. Next week we have the PCE data, right? So for right now, at least until now, PCE is the preferred inflation metric of the Fed. The Fed focuses on the PCE data to decide about their interest rates, to see where inflation is heading right now. Now, if we see right now here about the PC price index month over month and PC price index year over year. Earlier data was at 3.8%, and for the month over month reading, it was at 0.4%. And this month, we are again expecting an increase in the inflation. For month over month, we are expecting a 0.1% tick, and for the year over year PC, we are expecting a 0.2% uptick. What we expect that PC data will be even more elevated than this. We expect maybe a 0.6% reading here and at least a 4.1% reading here. The point is that due to the inflation shock, due to the Strait of Hormuz being closed, due to the oil prices being elevated, and especially recently due to the World Cup scenario as well. Right, due to all of these facts, we expect inflation to tick higher, which will obviously further pressure the gold prices. At the same time, we have the GDP data as well. We expect GDP to remain strong. We have the initial jobless claims as well, and we expect these to come in better as well due to the World Cup situation. GDP as well due to the World Cup situation, due to like overall the US economy being strong, right? The point is that what we are expecting going into the next week with the GDP data, with the labor market data, with the inflation data, we expect labor market to remain strong. We expect economy to remain strong. Meanwhile, we expect inflation to remain elevated as well, which will further put pressure on gold prices, right? Which will further cause some downside in gold prices going into the next week. That is why we are looking for some sells on gold prices. Obviously, if we see anything contrary to that, anything opposite to this, then we will adapt accordingly. But right now, as of now, we are bearish on gold and we are looking for continuation to the downside. Again, if we see the court report as well, we are obviously looking for the short term picture, right? So if we see the court report for gold weekly to weekly filings, last week investors they reduced their net positionings as well, and at the okay, investors they reduced their, let me just get it this straight, investors reduce their net positionings and they increase their number of shorts. The earlier number of shorts was, or the percentage of shorts was 12.73%. Right now it's sitting at 14.1%. And they also reduced their number of longs, which was obviously a bearish change for gold prices. So the institutions they took some profits in gold and they reduced their exposure to gold as well. Overall, when you talk from a long term perspective, obviously investors are still aggressively bullish on gold with the 85% plus long exposure and less than a 15% short exposure. But when you talk from a weekly to weekly filings, investors booked some profits, investors sold some sort of gold, right? And they are expecting a little bit of more downside in the gold prices as well going into the next few days. And in the same way, as I told you earlier, we are looking for continuation on gold to the downside. This was the first thing. After that, we are moving towards SPX, right? So as of now, I am currently long on SPX, and any updates to this trade or any changes to this trade, again they will be shared inside our public Telegram community, as we will be sharing all of our trades as free observation trades inside it. You can find it from the link given in the description. We are currently long on SPX, and the reasoning is going to be simple. The point is that SPX or indexes like the NASDAQ, they include big companies like Apple, Google, Microsoft, Media, Amazon, all of that, right? They include big companies. And these companies, these mega companies, they don't care about a one-time hike in the interest rates, right? As of now, the Fed is only expecting a 25-point rate hike. They are not expecting a rate hike cycle, right? So these mega companies they don't really care about a one time hike in the interest rates if going into the future you are expecting lower rates again, right? And also they don't really rely on the borrowing cost, and these indexes don't really move based on the interest rates. When from an overall picture perspective, they move based on the earnings of these companies, based on the hypes, based on the greed among the investors, based on the sentiment. And if you see the earnings of all of these tech companies, these AI companies, all of them, they have been rock solid, right? They have been rock solid. And if you see the sentiment, if you see the AI investor sentiment survey for the last few weeks, majority of the investors they have been consistently bearish on the stock market, right? Very few of them have been bullish, but majority of them have been bearish, which is again obviously a contrarian signal for us, which signals that indexes may continue to rally going into the next few days and weeks. And again, when the sentiment or the crowd is leaning heavily on one side, right? When the crowd is leaning heavily on one side, you typically don't follow that side. Why? Because crowd, the retail investors or the majority of the investors are usually wrong. So what you try to do is simply do the opposite of what they are doing. Right now they are bearish, so we are bullish, right? And we have our reasoning. The AI hype is still active. One time hike in the interest rates or expectations of the one time hike does not matter, right? For these companies, for these mega companies, obviously it can hit the Russell harder, the Russell 2000 harder, because it includes small cap companies, but it is not going to have a too much of a negative impact on like SPX or on Nasdaq, right? They are expected to continue to rise, but the AI hype is still active, the earnings are still strong. You are not expected to go into a rate hike cycle. And the fact that you have a pro stock market president, which is obviously Trump. Trump will do anything in his power to keep the stock market elevated, because at the end of the day, stock market is the report card of Trump, right? So if he has to manipulate the stock market in any way or something like that, he will do it, but he will try his best to keep the stock market elevated, right? That is exactly why we are still bullish on the SPX, right? And again, any changes to this will be shared inside our public Telegram community. After that, we have the USDJPY. And right now, as you can see, we are in some shorts on the USDJPY and it is in a bit of a drawdown. Before that, let's cover the SPX from our MRKT terminal as well. If we go on our dashboard, obviously I earlier saw it and I did my research, but let's just cover it from MRKT terminal as well so you can see it as well, right? So if we see the higher time frame bias or the swing trading bias on SPX is still bullish, with our target sitting around near new all-time highs and our pullback levels sitting around this previous daily demand area on SPX, right? And if we see overall SPX remains bullish, we have let it load a little bit. And again, if I show you my analysis, or if I show you the, if like let's say going into the next week I fail on this trade for any reason, if this trade takes me out and hits my SL, then still if anything at that time has still not drastically changed, then at that time I will still remain bullish on the SPX, and I will be looking for longs in that case around the 7200 demand and psychological area, or around the $7,100 demand and psychological area. Nothing is changing my bias right now. We have optimism, even if it's fake. We have AI hype still active. We have strong earnings, and we have a heavily bearish crowd, a consistently bearish crowd, or a pessimistic crowd in the stock market, and we have a pro stock market president as well. So all of these things, they tell me to continue looking for new highs on the stock market going into the next few days, right? Now we are moving to USDJPY. Right now I'm currently in shorts on USDJPY, and from a daily time frame, if you see from an overall trend perspective, technical trend perspective, or overall a macro picture perspective, right? The USD JPY or the short idea on this trade is very wrong. But the point is the yen intervention. If we go in our MRKT terminal, we can clearly see USD JPY here on the higher time frame and on the intraday time frame both is heavily bullish on both of the time frames. But there is one more thing which MRKT has also noted, that Japanese authorities have already intervened in the yen weakness. This can flip the bias bearish. Okay, this can push the USD JPY lower. This can make the yen stronger in the short term. Intervention risk increases near the current levels. What it is saying here, or what I want to tell you here, is that if you look at here, this is where the yen intervention happened. What it actually means is that the BOJ, they went into the markets and they sold heavy amounts of dollars and the US treasuries, which obviously put some pressure on the DXY, and it supported the yen here, 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 and here. And we are expecting the same again. We are expecting the same again from these current levels. As shown on the MRKT, the BOG members have already intervened, and they have also said that they will take decisive action on yen weakness in the financial markets if needed. They will take an action, right? So the verbal intervention is already here. We are just waiting for a practical intervention. Now, even if we don't see an intervention, I will simply take a loss on this trade, a predefined loss, right? And that doesn't matter when I'm looking for a better risk to reward, because this has played out multiple times. If it does not this time, that's another story, right? But most probably it will play out this time as well. Now the thing is that here, if we come here all the way, I guess that's 2024, right? The yen intervention in 2024, it took days of consolidation at these levels before the intervention actually happened, right? That made all the sellers desperate, right? They, you can say, itched all the sellers kind of before the intervention actually happened. So we can see the same type of scenario here as well. They can wait a little bit more. They can wait a little bit more of a short interest to rise. They can wait a little bit for more of a liquidity, you can say, right? They can wait a bit more, and we can very well see consolidation at these levels. Obviously we can see some type of a rate checks, but most probably we will see some consolidation at these levels, maybe a spike above it, slightly above it, the previous oils, before we finally see the yen intervention, right? So I'm willing to hold this trade, and any changes to this trade again, they will be shared inside our public Telegram community, as we are sharing free signals there. All right, so this was related to the yen intervention. Now after that, we have covered gold, we have covered SPX, now we have oil. To be very honest, going into the next week, uh Overall, if we see from a daily time frame perspective, right, we are seeing a bearish channel in oil prices, and it has continued to respect it for the past few days. Even even technically speaking and fundamentally speaking, even after the US and Iran MOU, even after the reports of Strait being open and fully open after 30 days or 60 days, even after all of those reports, oil prices held the lower leg of this channel. They didn't break below this channel, and they held this liquidity area as well. They didn't break below this liquidity area, right? They are still not back at pre-war prices. And the fact is that Iran closed the SOH again. Iran closed the Strait again. And if we see the short interest right now, if we see the short interest, majority of the traders again, they are now bearish on oil, right? They are betting heavily that oil prices will be back to the pre-war prices. That is why, due to the fact that Strait is still not fully open, due to the fact that technically oil prices are still holding this lower leg and this demand area, due to the fact that we can still see some sort of negative and positive headlines, and due to the fact that majority is bearish on oil, I would like to see some sort of stab with some oil longs going into the next week. Now, obviously, I'm not looking for any sort of big stab or any sort of big risk, or I'm not saying oil is going all the way back to, you can say, some sort of uh kind of $100 per barrel level or $200 per barrel level, something like that. No, I'm not saying that. I am simply saying that going into the next week, you can see oil prices maybe coming back to here. Obviously, due to the recent optimism, we can see some sort of a initial move lower in oil prices, test of the 73 $74 per barrel level before they continue higher and test the upper leg of this supply of this bearish channel, which is around the 84 $86 per barrel level, which is also coinciding with the supply area, with this daily time frame supply area, right? So what I am betting on next week is not a total flip of this short term bearish trend on oil. I am betting on a move lower and then a pullback, right? I'm expecting a pullback, and I would like to take this as a day trading buying opportunity on oil prices, because from a fundamental perspective, or mainly from a sentiment perspective and technical perspective, it looks pretty good. It looks pretty solid, right? That is why, even if you see the daily time frame, I'm not targeting again anything big. I am only targeting a pullback towards this channel to obviously take out the late sellers, to take out the crowd, to liquidate the crowd, to get better prices, right? To get better test of supply areas by the market makers, right? To flip the sentiment, right? That is exactly why I'm expecting some sort of a pullback going into the next week, and I may very well possibly take some longs if we get a retest of around this area on the smaller time frame, obviously around the $74 per barrel level, from where I will look for possible longs targeting maybe this, or maybe this supply area around the $84 or $82 per barrel level. Obviously, this is not a swing trade or something like that, or a long term trade. This is only betting on a pullback because of the sentiment, because of the short term macro picture, because of the technical holding. This is only due to that, and we are only trying to catch a pullback going into the next week. I may take this trade or may not, but this is my current bias on this trade as of now. And obviously, if I take this trade or any other trade, all of them will be shared inside our public Telegram community, and you can find its link given in the description, right? Overall, it is also betting against the market like the oil trade, but I would like to still take a risk. If I find it feasible, if there is not something which is drastically changed, I will still like to take some sort of a, you can say, kind of a stab on this trade. We will see going into the next week. Overall, the clear trades are going to be obviously gold sells around this area. If we see some sort of a pullback around this area, then I will be looking for gold sells around 42.15s 42.20s. And if we and overall, currently, I'm still holding SPX long, and I'm looking for continuation to the upside. If you don't see that continuation to the upside, if I fail on this trade, then I will still be looking for lower levels around the $7,200 or around the $7,100 for continuation of longs on the SPX, due to all the facts which I told you. And on the other hand, I'm still going to hold these USDJPY shorts until they take me out at obviously 162.600, or we see an intervention and they finally give me my targets, right? So yeah, this was pretty much it. I will drop all the relevant links in the description related to our community, our website, the market research terminal which we use, and everything else. If you have any questions, you can ask in the comment section. And yeah, this was pretty much it. Best of luck for the upcoming week.